You can go look at Venezuela, right, where there's cash clogging the gutters because no one fucking cares about the cash. The cash has lost so much of its worth. It's not worth the paper it's printed on. There will come a time where the US dollar Bitcoin price is that. It just won't make any sense anymore. And we'll stop quoting prices in dollars. We'll stop quoting the Bitcoin price in dollars. And we'll start quoting the prices of all goods and services in Satoshis. And I think that happens somewhere between 2031 and 2035.
Yes, welcome back everybody to the channel. My name's Austin, joined with my brother Aaron, with special guest Robert Breedlove, host of the What is Money podcast, as well as general Bitcoin thought leader in the space. Thanks for joining us.
Glad to be here, guys. Thanks for having me.
Absolutely. And you and I met with Dan Held at the Bitcoin 2022 conference, this last one. What have you been getting into since then?
Yeah, I remember our meeting. I think you guys were eating the boxed lunches and I was eating a steak that was delivered to me.
Pro move, bringing your own food.
Yeah, so conference was great. Just that was such an experience. Both this year and the prior year in Miami. I've told this before, but a lot of what I do is it's read, write, and talk about Bitcoin. And well, I say about Bitcoin, but it's also about, money and economics and human history, all these branches in the rabbit hole that Bitcoin opens up. So a lot of that work can feel at times isolating. You're alone a lot. You're alone with your thoughts, alone with your books, alone with the written content you're trying to form. There is a bit of interaction with people too, typically over Zoom like this. I'm having conversations with big thinkers about big ideas. But to go to those conferences and see the actual visceral response of people to the work it can be quite overwhelming. I call it being mobbed with love. Like every 10 or 20 steps, someone's like, "Oh my God," stopping you, saying thank you for this thing you wrote or for this episode you recorded or this idea that you introduced them to, and just really expressing gratitude for having value added to their life. And man, it just makes it all worth it. You can spend months and months in the cave, as I call it, doing the work, and you're second guessing yourself and you're wrestling with big ideas and you're not sure if you're crazy or really on to something. And then you kind of take this risk and just put it out into the universe, either as something published or just an episode, like a conversation. And to see people have a real response to that is just tremendous. It just refuels you to kind of keep going. So that was my experience at the conference. I couldn't believe that it happened 2 years in a row. I thought the first Bitcoin 2021 was like the first time anyone had really been back together in a really long time. So I thought people were maybe extra overzealous with their love and value and gratitude towards one another. And I thought I just kind of got lucky and enjoyed that first year. But the second year was a lot of the same. And I'm just really grateful to be doing what I do. So since the conference, that's basically what I've been doing. Been back to work, working on the show and trying to compile all my writings into a book, which I hope to at least get into a draft form by the end of this year. But I did say that last year too, so don't hold me to it.
And by the way, we've thought for a long time, you put out such great perspective on Twitter and with your podcasts. So the links for your stuff are down below. But just for the audience at home, what's your background? How'd you get into crypto/Bitcoin?
Yeah, so my educational background is accounting and finance. So I got a master's degree in accounting with a concentration in taxation, which is a bit ironic now that I spend a lot of my time teaching people about how taxation is theft. And I did a few years in public accounting. I was a entrepreneurial consultant, basically. So advising high net worth individuals and investment partnerships and investment vehicles for optimizing their tax liability, minimizing their tax liability. So that was my job straight out of school. I pretty quickly decided that accounting was not the path for me. It's very linear. It's very traditional. You know, you start out as staff, manager, senior manager, partner. And if you play your cards right, you know, from staff to partner level, you can get there in say 10 years if you're doing it quickly. And you know, you can make seven-figure income for the rest of your life, depending on, you know, what size accounting firm you're with. But that was just all too spelled out and clear and linear for me. So I needed something more entrepreneurial. So I decided after a few years I'd go into industry. And I grew up with computers. I grew up as a digital native, I guess, or whatever you want to call us. I'm an old millennial. I'm 36. So we started getting computers in our school when I was like 5, and I was one of the first kids to be assigned. You know, they didn't give them to all the kids early on in Tennessee. They just had a couple of computers, so they had to rotate the kids on and off. So I was one of the first. They got to start playing and experimenting with them, and I, you know, played video games growing up and all that. So I guess I had this deep intuition that the digital, let's say that computer technology, didn't really know about the digital age at that point, was just going to keep eating the world. You know, that there is such, there are much more economic ways of doing things on a computer than there are via paper or lesser technologies. So um, I've been trying to orient my career in that direction. So when I went into private industry, I was initially focused on tech. I worked in the hospitality sector for a while. So our firm provided all the operational software for hotels, so time and attendance, room management systems, um, you know, all the backbone operational software for hotels. And then later got into healthcare software as well. Did some CFO work there, and then finally just decided I wanted to work for myself. And I took the plunge into, I had one CFO consulting client when I left my last gig, and I didn't know really what I was going to do other than do that and figure out the rest. And I'm really happy I did that in retrospect because it gave me the freedom and bandwidth to look at crypto initially. And my light bulb moment was reading Nick Szabo's work on smart contracts, which is a little bit ironic because now I'm pretty much what anyone else would call a Bitcoin maximalist. I only hold Bitcoin, I only focus on Bitcoin, I only talk about Bitcoin. I've adopted the position that pretty much everything else is a scam. I don't think necessarily that everything else is 100% a scam, but it's just a useful way to look at the rest of the universe and just stay focused on Bitcoin. So it was a bit ironic that it was Ethereum's marketing that introduced me to the concept of smart contracts that led me to Nick Szabo's work on smart contracts. It was written in the late 90s, and he uses the proverbial example of the vending machine as the primitive smart contract of this device that just automates relationships between buyers and sellers. And the epiphany I had was, oh my goodness, the entire finance industry is a smart contract, basically, right? It connects buyers and sellers or borrowers and lenders. And the fact that this technology seemed to be something that could automate a lot of these relationships that we today use things like Wall Street for was a really just kind of earth-shattering revelation for me. So I decided at that point I was going to start investing and learning more. I originally just had the Coinbase app, started buying, I think it was Bitcoin, Ethereum, and Litecoin were the three listed originally. And that was late 16 going into early 17. And then 2017 was a crazy, crazy market. I think the whole space was up 1,800% in 12 months. And from there, I launched a multi-strategy multi-asset crypto fund, basically. And that took me even further into the rabbit hole. Started writing investor updates for my LPs, learning more and more about Bitcoin as I went. And I will credit the Bitcoin Standard by Safety Namus has given me the final push. I
Good
knew,
book.
yeah, it's a great book. I had put a lot of pieces together about economics and money, but I didn't have the Austrian economic piece yet. And he introduced me to all of that. And then I was fortunate to read that pretty much exactly when it came out, like the weekend it came out, I think April 2018. And yeah, now I've just been going down this rabbit hole, and nobody knows where the bottom is. And I feel very grateful to be doing what I enjoy doing and adding value to the lives of others in the process.
So what's your why when it comes to Bitcoin? Why are you so passionate about Bitcoin specifically?
It's a great question, and I actually designate myself as a freedom maximalist. I think that freedom is the highest value, such that realizing other values is damn near impossible without freedom, right? You can't, for instance, coerce the truth, right? You can't put a gun to someone's head and say, make this thing true. Like that doesn't make sense. You can't coerce love, right? You, it has to be reciprocal. It can't be unrequited love. So freedom seems to me pretty paramount in reaching towards anything of value in the world. And my why for Bitcoin is freedom, frankly. It's not everything, right? It can't provide you physical security. It can't, you know, do your laundry or make your food or anything like that. But it is, if money is the most important technology that human beings interface with, and I make a lot of arguments on my show that it is, um, that makes, and the purpose of any tool or technology really is just to save us time, right? To give us more freedom, to give us more options, to expand our optionality in the world. Then that makes money the most important, as I said, it's the most important technology, but it's the most important tool for freedom in that it gives individual users the greatest number of options. In fact, that's the whole value proposition of money. It doesn't really do anything else other than act as pure optionality in the marketplace. And so Bitcoin, and we always, we ask the question, what is money? There's a lot of answers to it, but one of the most useful, I think, is if you get to these 5 properties of money, and people give you different numbers, somewhere between 3 and 15. I narrowed it down to 5. I won't go into detail on what they are because I do a lot, but I'll just name them. It's divisibility, durability, recognizability, portability, scarcity. These are basically the things that market actors seek in good money. Or when we're choosing what technology to use as money, we're looking for what best satisfies those properties. And Bitcoin has sort of perfected them in a lot of ways. So, um, taking that argument at face value, you'd say Bitcoin is the ultimate form of money. Money is the ultimate technology for human freedom. There's a lot of strong arguments made that it's foundational to a moral and civilized society. Like, you can't have civilization without money. I would take it a step further and say that the integrity of the money supply specifically is bound up with the integrity of the civilization running on top of it. So you could think of it as like, quite literally the bedrock on which we build civilization is money itself. It's kind of like the layer 1 operating technology. And so if Bitcoin is this perfected or nearly perfected form of money, then it is obviously the greatest tool for human freedoms there's ever been. And it offers us the potential of building a civilization on top of it that has as great of integrity as the supply of Bitcoin has itself, which is this fixed supply of 21 million. So I'll leave it at that. I opened a lot of potential rabbit holes to go down, but that's why I think Bitcoin is extremely important. And my why, I do view Bitcoin ultimately as a means to an end, and the end itself is freedom.
So the average person should care about Bitcoin, should opt into Bitcoin because they would have more options, more freedom, a better future with more integrity.
Well, not exactly. So I would say I don't like to should. I'm not here to prescribe people what to do, tell them to buy Bitcoin. I'm not here to sell you Bitcoin. I am here to encourage you to ask good questions and pursue what findings you have in the wake of asking good questions. So there's always that standard disclaimer of this is not financial advice, and then they'll say a bunch of stuff. Well, this is financial advice. Go and develop a robust worldview for yourself, right? Ask good questions, look at the world, think deeply, rely on the opinions of others, not anyone individually exclusively, but a broad set of others, right? Synthesize ideas from a number of people, assimilate your own worldview from that. And after you've constructed this worldview, make your portfolio reflect that, right? You should own what you believe in. What you own, the property relationships you hold should reflect your actual convictions about the world. Otherwise, you're going to be shaken out of your position. You're never going to, I don't think you can succeed without believing what you own. So I don't want to tell people to buy Bitcoin. I tell people to ask themselves, what is money? See where that question leads you. And then if Bitcoin fits the worldview you've constructed, then make it part of your portfolio.
Speaking about what is money and Bitcoin, assuming that, government issued fiat currencies are one of the biggest competitors or the antithesis to Bitcoin, comparing Bitcoin to the US dollar, the US dollar is dying as a global reserve currency. Is that correct? How is that possible?
Well, it's a good question. And I would zoom out a bit and just look at fiat currency more broadly. And again, a number of ways to answer this question, but let's say to answer the question specifically, what is money? Let's answer the question, what is money, like this. Let's say that, here's a good analogy. In the same way that a stock certificate is titled to company capital, right? So if you own a share of Tesla, you own a fractional share of the capital that company owns, basically, and the future cash flows derived thereon. Money is like a meta version of that. So it's not a legal title. It's not what I mean necessarily. It's more like a call option, but it's a call option on global capital. So you own whatever portion of the money supply you own, whatever fraction you own, that's a reflection of a share in the global capital stock. Okay, so that's one good definition of money. And then if you take that and superimpose it on what fiat currency is a form of money issued by a central bank, which is preserved by a legal monopoly. So this is to say that it's the only business in the world that if you try and go and compete with the US dollar or any other local fiat currency, you will be coerced out of that business, right? They'll stop you. They'll shut your business down. So you have this, we all have the proverbial gun to our head to use the local fiat currency. It's a business built on coercion, essentially. It could not exist without the coercion because people would choose anything but the dollar that the people inside the legal monopoly at the central bank can print ad infinitum and externalize all the costs onto society. So to put it in very simple terms, it's an institution of systemic theft. The printing of money is always and only theft. It is nothing else. There's no equitable economic benefit whatsoever. It only benefits those inside the monopoly and hurts those outside the monopoly. Full stop. So what does this mean is that if the central bank can issue new currency and use violence to preserve its monopoly on that currency production is effectively it's able to confiscate capital, right? The call options to capital can be confiscated by central bank shareholders, while everyone else outside the monopoly is getting diluted via inflation. So is the US dollar dying? I would argue definitively, yes, it's going to. All fiat currencies across history have failed for that very reason, that it's a parasitical institution on the market economy. The parasite always gets too aggressive, and that's why we end up with hyperinflation, right? The currency breaks, collapses. Typically, the civilization running on it also suffers tremendously. You could look at the history of the fall of Rome. For instance, they had a collapse in the monetary protocols, which led to a collapse in the political protocols, which led to a collapse in the broader civilization. And then indeed, when Byzantium came back, emerged from that, the Eastern Roman Empire emerged on a hard money standard again. So it's like you have to have money that works to get a civilization that scales. But with fiat currency, you have this twisted incentive that insiders always want to print more and more and more. And historically, they've always taken that to the point of hyperinflation, which leads to the destabilization and ultimately collapse of the civilization on top of it. So fiat currency has these incentives geared towards its own self-destruction over time. But between the point of its inception and the point of its ultimate hyperinflation, those in political power are using it to confiscate capital from those not in political power. So what are we living through today? I would say it's another one of these mass plunderings where we've just printed, I think, 6 trillion US dollars in the past 24 months. That money is distributed to insiders that are basically benefiting at the expense of outsiders. And yes, this will ultimately lead to the demise of the US dollar, but the timing of that event is damn near impossible to say.
And piggybacking off that, just talking about current events today, the DXY is hitting 20-year highs. So yes, long-term all fiat currencies die, but how do you see the next, decade going if we're hitting all-time highs against other fiat today?
There's another weird thing about money too, is we think that you hear this term hyperinflation, and you think, oh, they just print money and then it linearly depreciates and the money eventually goes to zero, and that's hyperinflation. Like there's some kind of smooth curve from hard money to soft money, right? But it's nothing like that at all. It's actually quite the opposite. It's extremely volatile. And the reason is, and I'll offer you another definition of money now, is that money is an insurance policy on uncertainty, right? If you are facing conditions where you don't know what is going to happen, then the best strategy for going into that situation is to have as many options as possible, because you don't know which way the world's going to move. So you want as many options as you can have. So as we said earlier, if money is this perfect technology, this technology of pure optionality, then holding money is increasingly the wise strategy as things get more uncertain. So the more uncertainty there is in the world, the higher the incentive there is to hold or save money. So when it comes to fiat, you get this weird situation. You mentioned the DXY, which is the dollar index. Things are very uncertain right now, getting more uncertain by the day. If you've paid any attention at all, there's a war in Ukraine, global technocratic utopian World Economic Forum psychopaths trying to pump all kinds of stuff into all kinds of people. You've got energy crisis in Europe. You've got all these geopolitical breakdowns, right? Uncertainty is ramping up quickly. And if you don't know that, I guess you've been living under a rock. Well, what's the optimal strategic response to that? It's, well, I need to hoard money. I need to save money. I need to accumulate as many options for myself as possible going into these conditions. So how does that translate into purchasing power of fiat currency, specifically for the dollar? It's that the value of the dollar is going up, right? There's more reservation demand to hold dollars and not spend them, not buy stuff, not trade them away. However, that provides some kind of a false confidence in a way. Typically, central bankers will see that and be like, oh, well, we printed money. Here's the perverse thing about it. You're printing money, so you're increasing uncertainty in the world, right? You don't know how many dollars in circulation, you're distorting price signals, you're misleading entrepreneurial activity. So you're driving entrepreneurs to overborrow, to start projects they cannot finish. And then when these projects ultimately wash out and fail, if enough of them fail simultaneously, that's what we call a recession. That's what we're going into right now, right? So the printing of fiat currency increases uncertainty in the world, yet the holding of money is the insurance policy on uncertainty in the world. So you get this really confused situation where people are hoarding money as uncertainty rises, but then eventually there are shocks, right? Where people need to get food, people need to get shelter, they have to consume. And a lot of that money gets dumped back out into the market. And then you'll see the purchasing power swing the other way. So the punchline here would be that printing of money is increasing uncertainty. And then that increased uncertainty gets expressed in higher volatility of the purchasing power of fiat currency over time. So the case study for this is go and study the hyperinflation of the Weimar Republic. And this is in the 20s and 30s, I think, 1920s and 30s. I might be a little bit off on the years, but just Weimar Republic, Weimar Republic in Germany. Look at the price of gold during the Weimar hyperinflation. It would go up 5, 10x, and it would draw down 80, 90%. And it would do that repeatedly. And the amplitude of the waves would get bigger each time. So it's not like they just printed a bunch of marks and the mark price of gold went from 1 to 10,000. It was super volatile up and down the entire time. So I think we're going to be going through similar circumstances today, and you'll see this expressed in the price of gold and the price of Bitcoin as these fiat currencies collapse worldwide.
Let's talk about the US. I hear people say all the time that, man, if the US doesn't get their act together with Bitcoin, they're going to fall behind. How important is it for the US to adopt a Bitcoin strategy?
It's important for any nation state that wants to have any semblance of survival into the digital age to get their act together when it comes to Bitcoin. And again, I think smaller countries are going to continue to maintain a lead here just because their decision-making apparatus is much smaller, more nimble, more agile, right? And El Salvador can move a lot more quickly onto a Bitcoin-like standard, whatever they're doing with it, they can make that decision and move much more quickly than a megalithic United States can. How important is it? And I grew up in Tennessee, I'm American, so this is sort of near and dear to my heart in a way, but ultimately, another way to look at Bitcoin is that it is just the most unbreakable form of property we've ever had. And I want to expand upon that because people, when I use this word property, and I haven't found a better word, so I keep using it, it's not the thing. It's not the stock certificate. It's not the company capital. It's not the car. It's not the house. It's the relationship between the owner and that asset, whatever that asset may be. And so that relationship is typically codified, right, by the state. The state maintains a list of who owns what, right? So if you walk into your house and there's a guy sleeping on your couch, presumably you can call the cops and say, hey, get this guy off my couch. This is my property, right? He doesn't have access. He doesn't have the rights or responsibilities over this house. I do. When that relationship is broken down, as we said earlier, it destroys civilization. Like, you can't do anything without property. If you don't have rights to the fruit of your own labor, you don't have any other human rights. You don't have anything. You can't do anything without property, basically. So in the United States, one of arguably the greatest economic experiment of all time, because it was premised on life, liberty, and property and decentralized governance, right? That's how we were established, is to have checks and balances inside of the political apparatus such that we wouldn't have some tyrannical person come to power, and we wouldn't have a central bank. That was the other thing, that the United States was designed not to have a central bank. We resisted the first two implementations of the central bank, and then Andrew Jackson did not renew the charter. We ultimately did institute a central bank. I think it was the National Bank as for war, as is always the case. We always need the central bank to fund warfare, or we're not sure. It's kind of a chicken and the egg problem, but they're very closely related. And that's when we go off the rails. Basically, you move away from a decentralized political institution that's intended to enshrine and preserve life, liberty, and property, and you install this organization that preys on property. Again, printing money is everywhere and always only the violation of property. You're stealing from those that are saving in dollars, and you're reallocating to those that get the new dollars first. This is the Cantillon effect that so many people talk about in Bitcoin. Once you implement that, the whole civilization, you're basically putting a parasite onto the host organism, which is the productive market economy. That thing starts to suck the blood out of the market economy, right? It starts, and I mean this, when I say blood, I mean life energy, right? People are investing their time, effort, and energy to create things of value. And then those inside the legal monopoly of the central bank are sucking away the property rights that those people have established for themselves. It's a parasitical relationship. And of course, that leads to pathology in the host organism, right? The organism, the market economy becomes sick over time. And I think you see these symptoms in culture, right? We see fiat culture. We see this is a bit of a turn, but there have been books written about zombie mythology. You know, the zombie mythology is a relatively new thing. It's only been around about the past 50 years. And if you look at the chart of when zombies became a mythological phenomenon, it's kind of right after 1971, right when we went off the gold standard. So I think when we started to accelerate the violation of private property by moving off of hard money, that you see, when I say sucking the life energy out of people, like that's actually what's happening, and that becomes reflected in our cultural discourse and our cultural creations. So I may have deviated from the original question a bit, but I hope that
Well,
helped answer it.
I loved it. And just to go further on that, like if you say, by the year 2030, if you were talking to the president then, like practical steps, what would be a good strategy for the US? Is it just store a value, hold a bit in the treasury? What should they do?
Well, so the United States is in a very unique position because we have the exorbitant privilege in that we hold the global reserve currency, which is the US dollar. So despite there only being 330 million people in the US, there's over 4 billion users of dollars worldwide. So we have this, and that exorbitant privilege is something that's been infamously ascribed to the dollar, that we can basically export dollars that we can print ad infinitum and the world can send us goods and services. So this has given us a very asymmetric position to be able to get rich, right, at the expense of the rest of the world. So the position we're in now and how it relates to Bitcoin is unique in that the United States, here's how I would do it if I was in power, is you start buying Bitcoin right now quietly. Right? You have the monopoly on US dollar production, shareholders of the Fed. You can produce as many dollars as you want, basically with no political due process between you and the production of that currency. So you can confiscate wealth via inflation until the currency collapses, pretty much. But your currency is in the strongest position worldwide because it's the most desirous asset for a number of reasons. But let's just say to start acquiring Bitcoin quietly with essentially free money, right? There's not a huge expense to the production of dollars for insiders of the central bank. And then when you've built your position, whatever that is, maybe it's 1 million Bitcoin, 500,000, I'm not sure. Once you've built a position, you can then go into the world marketplace and say, hey, Bitcoin's a real form of money. And we have this SWIFT system, right, that denominates international and domestic wire transfers that a lot of the world runs on. A lot of the oil contracts in the world are denominated in dollars. This is part of the Bretton Woods Agreement. We're seeing some breakdown of that now post Russia-Ukraine. But there's still a lot of inertia, let's say, with that network effect. You could then leverage that network to start selling the rest of the world Bitcoin. Like, hey, we've made Bitcoin a reserve asset. We're buying it and accumulating it. We're not going to stop. And if you guys want to get on board, well, here's how we did it. And we can, we can sell you this way to buy, accumulate, custody, manage Bitcoin, probably leverage Wall Street to do a lot of the custodian function, and say, we'll render this service to you. And you can start to induce, you can basically front run the rest of the world, and then you can induce everyone else to start buying Bitcoin as just a means of protecting themselves from your game theoretic position. That's, you're an early adopter effectively. And that, this is a number of things. This would put the United States in a position of tremendous wealth, right? Tremendous wealth, because you'd start to instigate what we call hyper Bitcoinization, which is something where, and it doesn't have to go hyper per se. It could just be the natural growth of Bitcoin over time, that it's becoming a more valuable asset. It's storing more purchasing power. But you could be the first one to sit down at that table. And the sitting down at that table, because you're the biggest one in the room, is causing others to sit down at the table, which causes Bitcoin to grow even more. So that's what I mean by front running. But more philosophically, perhaps, this gets the United States back to where it started, which was decentralized governance, life, liberty, and property, low and predictable taxes. That's what made us so wealthy. That's how we created the most valuable companies in the world, right? You see where in the East, in the United States, it's much more regulatory heavy. If you go to something like Wall Street, it's very kind of old school regulatory heavy. Whereas you look West, where the FANG stocks formed, right? There's less governance there. It was more pioneering, wild, wild west. That led to the most economic value creation in human history. Facebook, Apple, Amazon, Netflix, Google, like these are all West Coast creations. So I think it's impossible to keep money out of politics, let's say, so things tend to ossify and become corrupt over time. But we can get politics out of money by just moving to something like a Bitcoin standard. And ultimately, all those political games, as we said earlier, they're just sucking the life force out of the market economy. So it's reducing innovation, it's reducing wealth creation, it's reducing the process of civilization itself. And so I think that move, it could cement the United States as the 21st century nation state model, whatever that is. It's hard to use the language here because the nation state derives its revenue from inflation and taxation. In this Bitcoin world we're going into, those aren't going to work anymore. Obviously, inflation's not going to work. You can't print more Bitcoin. And then taxation, specifically non-consensual exchange, it's going to become more consensual, because if people don't like the services that are being rendered from their government, well, then they can vote with their feet in a way they never could before. Right? If you tried to leave the US right now, if you have above a $2 million net worth, you're subject to the exit tax. But with something like Bitcoin, you just walk the fuck out and that's it. You lost it in a boating accident, on to whatever country's treating you best. So this new dynamic of countries being accountable to the preferences of their customers, I think is going to reduce taxation and inflation as revenue drivers for the 21st century nation state, which means what? I don't know what they're going to do. They're going to have to render a marketable service at a market rate that's actually satisfactory to human beings. So in a way, Bitcoin like whips government into shape in the long run. And so the real opportunity for the US is to just realize that reality that's here. You can't do anything about it. You can't turn it off. Fight it as you will. The incentives have changed. The incentive landscape has changed, and this changes everything, including your business model, Mr. US government.
Nice. I'm curious to get your thoughts on Bitcoin versus crypto a little bit more. Now, I would assume that perhaps you think that in the far future, Bitcoin takes majority market share. And if that's the case, how do you reckon the fact that crypto has grown over the past few years? I don't know, like I remember in like 2018, 2019, 2020, I think a lot of Bitcoin maximalists kind of thought that crypto wouldn't be as popular as it got last year. and including some people like just like the mind share of Bitcoin only, kind of just going broadly more just general crypto. So what are your thoughts on this?
Yeah, so I think Bitcoin is a unique path-dependent one-time invention or discovery. I've written about this in the number zero in Bitcoin, where I compared the success of the numeral zero and the Hindu Arabic numeral system to something like Bitcoin, that it's just a system of information processing, which ultimately that's what money is, that is economically superior. So it outcompetes all other, the Hindu Arabic numeral system outcompeted all other numeric systems, right? And became the global standard. I think Bitcoin does something similar. It wipes out all other forms of money and becomes a global standard. So that said, I think there's full consolidation at layer one. I think Bitcoin is, when all the dust finally settles, it's the only economic institution left standing. Like, it's the only thing that matters at layer one. Now, all of these other features and functionality, we mentioned smart contracts earlier, maybe there will be some type of experiment with physical property rights. I'm not sure how all that works. It's a little too bleeding edge for me. Maybe that gets pushed up into layer 2, 3, 4 on top of Bitcoin, but you have this global digital non-state money as the ultimate layer one trust minimized asset, um, the ultimate time chain, right? Because it's not really a blockchain, it's more of a time chain. That's a little bit of a rabbit hole there in and unto itself. So for me, that would mean that a lot of these other layer one tokens just they don't make sense. I don't see that. I don't see the market fit for anything there. And then I think a lot of the bells and whistles and features that are being experimented with there ultimately get sucked into layer 2, 3, 4 on top of Bitcoin. So I don't see, I mean, I kind of see, I know it's never black or white, but I basically foresee a total token extinction over time. Now, why has crypto been successful? There's another counter force here that's really interesting to think about. When fiat currency supply inflation increases, and to the degree at which it increases, the rate at which it increases, you see a number of things. Again, we said earlier, it's the violation of property rights, right? So people are being robbed via fiat currency inflation. Well, what happens when you're being robbed? Even if you don't understand it, what happens? Well, if you look at the history of money and the history of inflation and ultimately hyperinflations, people develop a urge to gamble, a propensity to gamble, right? You don't need to get it cognitively. You just know that, hey, prices are going up really fast. I can speculate in these, whatever market it may be in. It could be art, real estate, tulips, like all these different, bubble categories that we often talk about in mainstream economics, go hand in hand with the depreciation of currency over time. So if I look at the crypto landscape today, I see a whole lot of gambling devices, frankly. And it's one of the purest expressions of price volatility created by fiat currency supply inflation. And then you combine that with very thin liquidity on these tokens, right? And very thin, right? To the point where some of them you can't get out of and all of that. Further combined with the incentive of crypto asset purveyors to pump these tokens, right? To introduce a narrative, whatever innovation theater or fancy words or, paradigm shifting technology you're trying to wrap into this thing. And you get these very nonsensical tokens that can go up 100,000x in a day and then down to zero the next day. It's one of the purest expressions of this urge to gamble that comes with the rapid depreciation of fiat currency. So we're not going to stop printing money until fiat currency collapses. I would assume crypto would probably move in tandem with that. You'll probably see more demand for crypto and crypto tokens and all these gambling devices in line with the depreciation of fiat currency over time, which leads me to this. Like, I've wrestled with this a long time. Again, as an advocate for freedom above all, I've always said, hey, do whatever you want, experiment, like whatever you want. I don't care. I'm not so interested in it. I'm just going to try to study the world, develop a worldview, make a portfolio construction that's reflective of that worldview, and then we can compete with one another in the marketplace. I don't really care. I'm not going to morally judge you for what you buy and sell. Now, that was actually a position that was considered to be quite soft in the Bitcoin maximalist community, and I was berated for it. And so it took me back, and I've taken a closer look at my own perspectives, and I've taken a closer look at the feedback that people have given me. And what I've arrived at is the following useful fiction. So there's a reason we treat every gun as if it's loaded. We don't actually believe every gun is loaded. I think most guns are probably not loaded, right? Most people probably store them not loaded. Yet when I pick a gun up and I'm going to clean it, or I'm going to disassemble it, or I'm going to inspect it, or I'm going to give it to someone, I never point the gun at anyone or myself, right? That's a rule. It's a heuristic. It's a rule of thumb. It does not mean that I believe, again, the gun is actually loaded, but it's a safety precaution. So it's a useful fiction that I adopt in my behavior to protect myself and others. For the same reason we treat every gun as if it's loaded, for me, and maybe for others, you're welcome to use it if you want, I think it's useful to treat every crypto project as if it's a scam. I can't identify where there's a product market fit at layer one. I think there's total consolidation at layer one, as I said, into Bitcoin. So that's out the window. I see people, there's a huge incentive to deceive and bullshit and feed people these innovation theater narratives to profit at their expense. And there's a huge incentive for people being victimized by inflation to buy these damn gambling devices, trying to win the lottery. So for me, I can put all those three together and say, you know what? I'm just going to treat every crypto project in the world as if it's a scam, so I don't hurt myself or others. And that's it. Doesn't mean that I necessarily think every person involved in crypto and every crypto project in the world is out trying to scam somebody. But for me, it's a good, useful fiction. And it keeps me laser eye focused on Bitcoin.
My final question, maybe a two-parter, but I know you talked about this a little bit on your show with Corey Clipston, but could you explain why proof of stake will ultimately fail? For the audience at home, Ethereum is about to merge, switch to proof of stake. Why is that not a valid blockchain?
Yeah, so for proof of stake, the first thing I would say is it just does not work as money. Flat out. You cannot have proof of stake money. That is essentially what we had, by the way. Gold, historically, proof of work money. Takes energy, time, effort to get it out of the ground, to extract it, purify it, store it, secure it, right? It is money rooted in the expense of energy, which gives you high assurance of its supply integrity. You cannot counterfeit energy, which means you cannot counterfeit gold, right? We couldn't figure out how to counterfeit gold profitably in a lab. Alchemy, in that sense, did not work out. So you had this skin in the game that's imposed by the proof of work associated with gold production. Now, obviously, that's great, right? For preserving value across time. Gold is a wonderful technology. This would be another definition of money, by the way. Technology for expressing value across space and time. So in gold, we had something that did a great job across time, but obviously suffers when it comes to expressing value across space, because gold is heavy, it's physical, cumbersome to move. You have to secure it. You know, if you're going to move it between countries, you have to not get robbed and all of that. So technologically limited in its capacity to express value across space. And this introduced currency, right? This was the impetus for introducing gold-backed currency. Is this tool does not work for a globalizing society. We need an instrument of higher frequency transaction so that we can move value faster across space to increase the economic division of labor, wealth creation, all of these things. So gold-backed currency was the solution to that. And that works really well, actually. If you can have money that's reliably pegged to gold in paper or electronic form, then you've solved the problem, right? You've got gold, and it's associated proof of work, holding value across time, and then you've got the paper or electronic version that can be moved rapidly across space. So now you have a good technology, money for moving value across space and time. The problem, of course, is that you have introduced the need to trust humans into that equation, and that is the breakdown that ultimately leads to fiat currency. So in that sense, you have gold that's proof of work money. That central banking is basically proof of stake built right on top of gold, right? It's whoever has the most gold gets to issue themselves the most voting shares in the organization, and they get to decide the direction of monetary policy. And at the top of that heap, you have the United States, right, which wrote the Bretton Woods system post World War II. You've got the dollar pegged to gold, so we are pegged to the proof of work coin, and then all the other proof of stake tokens are pegged to R, which was a proof of work token at the time, but post 1971 becomes proof of stake. Right? It's just he who holds the gold makes the rules kind of thing. So I say all that not to bore you to tears, but to just say that proof of work is essential for a functional money across time. When you separate from proof of work, it does not work as money, cannot work as money ever, so long as we live in a universe governed by thermodynamics. It's not possible to have a proof of stake money that is sustainable over time. Now, all that said, maybe proof of stake is useful for other market use cases. I don't even pay attention to this world anymore. You know, I used to look at it when I ran the fund. They're all less interesting than money. They're all smaller than money. They're all, and there's, you know, how many crypto assets are there today? 30,000, right? So you've got 30,000 contenders for these smaller, less interesting market segments. Is there something there? Sure, maybe there is. I don't know. But it's not going to be money. That race in the crypto asset universe, I think, has been run and won by Bitcoin. And I don't see proof of stake. And again, I'm not the guy that looks into this deeply. I don't see proof of stake mattering much in the world ahead. It just doesn't. If you just, what is the, there's a verse in the Bible about this: from he who has, more will be given; from he who has not, all will be taken. That's what proof of stake is. If you have some of it, you get more. And if you have less, you get less. So it rips itself apart over time. And I think that's the same thing we're seeing in the world today with fiat currency inflation. The rich get richer, the poor get poorer. That's due to the proof of stake central bank built on top of proof of work gold and our separation from gold ultimately that's causing this whole thing to fall apart. I think proof of stake systems that attempt to be anything like that in terms of, you know, scale and scope of governance will have similar fates.
Aaron, final question.
Yes. My final question. You know, this might seem trivial, but I was hoping to get a Bitcoin price prediction by 2030. And you know, like you're a guy who thinks like, you know, so deeply and thoughtfully about so many things. So, you know, I know it might seem like a trivial question, but like from your thoughtful perspective, like realistically by 2030, what do you think about Bitcoin?
You know, every time I open my mouth about a Bitcoin price prediction, I get grilled forever about it. So I always have to deliver the very important caveat that actually like the way Taleb puts it. All models are wrong. Some are useful. Most are dangerous. So when I'm espousing a price prediction, that's just a model, right? It's just, I've looked at the world, I've looked at the past, I've built a model for the future. I really expect it to be wrong ultimately. Obviously, you don't want it to be, but you have to expect it to be. Otherwise, you're just an arrogant psychopath. And you can compare those models to other people and maybe try to assimilate them into something, you know, to sanity check yourself, let's say. So I did an episode previously with Robert Kiyosaki. This was maybe 18 months ago. And I walked through where I see the US dollar going in the next 15 years. So this was from 2020 to 2035. And I have a public prediction that the US dollar is basically hyperinflated to zero or close to it by the year 2035. Now, I won't go, I would say just go check out that episode. I walk through the math specifically and what my historical comparatives were to get to that. But assuming I'm going to stand by that prediction today. I know DXY is way up recently, but again, I sort of expect this thing to get volatile before it breaks down. If that is the case, then I have a matching Bitcoin price prediction of $12.5 million US per Bitcoin by the year 2031. Now, the caveat there is that that would only be a $1 million Bitcoin price in 2020 dollars. So in the purchasing power of 2020 at the time I made the prediction would be the equivalent of $1 million US Bitcoin. So what this is saying is that basically $1 million doesn't buy what it used to in the year 2031, right? It's been depreciated 91, 92%. So the way you could flip that is to say, take the price of bread in 2020, price of bread and milk, multiply by 12. That's what those things would cost in this hypothetical 2031 future. So if bread is $5 a loaf in 2020, I'm calling it $60 a loaf in 2031. Bitcoin's priced at 12.5 million, but that's only $1 million in today's purchasing power. I hope that's not too confusing. I'll stand by that prediction as well. And when the US dollar does hyperinflate to zero, hyperinflate to worthlessness, let's say, well, that's why Bitcoin has no top, because fiat currency has a bottom. It goes to zero. So then you're not even pricing Bitcoin. There's a point where the the US dollar denominated Bitcoin price doesn't make any sense or hold any relevance whatsoever. Right? At the point of hyperinflation, the currency loses its capacity to convey meaning and meaningfulness. You can go look at Venezuela, right, where there's cash clogging the gutters because no one fucking cares about the cash. The cash has lost so much of its worth. It's not worth the paper it's printed on. There will come a time where the US dollar Bitcoin price is that. It just won't make any sense anymore, and we'll stop quoting prices in dollars. We'll stop quoting the Bitcoin price in dollars, and we'll start quoting the prices of all goods and services in Satoshis. And I think that happens somewhere between 2031 and 2035 is my useful, probably wrong, perhaps dangerous model on the world.
Robert Breedlove, thank you so much for sharing your time coming on the channel today. Links for all your stuff are down below. Final thoughts for the audience.
It's all about life, liberty, and property. We used to say in Tennessee, believe, I guess they say this everywhere, believe half what you see and nothing what you hear. We live in a world with a lot of bullshit at the moment, and I think Bitcoin is, just studying that question, what is money, and studying whatever Bitcoin leads you to naturally by conforming your thinking self to Bitcoin. It's going to lead you to ask a lot of questions. And if you follow those rabbit holes, I think you can find something like a source of truth in a sea of bullshit that we're living through today. So I hope my work is helpful in that regard, and I really encourage people to pursue the truth themselves.